Hello, everyone, and thanks for joining. I'm Ted Dixon of INK Research. I thought we would do a live stream today because it's been quite a volatile time in the market, and insiders have been very active, and especially over the past week, once we had the surprise jobs report with all the bartenders being employed for the World Cup brought a lot of volatility into the market. And of course, we have the ongoing drama in the Middle East that has daily ups and downs as of Thursday afternoon. And today is June 11th on Thursday. The war is apparently there's a deal to start negotiating a peace deal. So we'll see if this lasts. Donald Trump has announced this, but we'll see if it lasts into the weekend. And of course, this is just a start of negotiations, and I'll talk a little bit about that as we go through. What I want to do today is take a quick look at sentiment, where insider sentiment stands. I want to take a look at some of the themes that we think that are helping to drive the overall upbeat tone we're seeing in insider sentiment. And I want to take a look at some of the stocks that insiders have been buying since Friday and where they're buying it. Now, before we get into that, I just want to encourage you, if you're new to Canadian Insider or INK Research, take a look at our CanadianInsider.com website to join as an intro member. That's free. You'll get a free watch list and access to some more reporting tools. And then you can sign up for INK Chat, which is our community space, and that's free as well. You can sign up for that using your account email. So with that, let's get into what we're seeing on the sentiment side. I'm going to start off with looking at insider sentiment as we track it using our INK indicator. That takes a look at the number of stocks in Canada that have insider buying compared to this number of stocks with insider selling over the past 60 days. We look at key insider buying. That's officers and directors that are buying for beneficial ownership or selling their own stocks for cash. So any indicator reading above 100% means there's more companies with key insider buying than there are with selling. So on that basis, it's pretty encouraging what we see right now. Now, this is the INK indicator line, the blue line, and it has been ticking up recently. That's good news because the market has been ticking down. This is the INK Canadian Insider Index. That is 50 stocks listed on the TSX that our INK Edge Outlook process has identified as being in the top 30% or higher that make it into the index based off of a range of liquidity criteria. And this had a good year, the INK Canadian Insider Index. It's as of today, it's up about 26.6%, including dividends year to date. So it's a pretty good return. It's better than all the major indices out there, including, I believe, the QQQ, the NASDAQ 100, and also the S&P 500 and the TSX Composite. So it's been a good year so far for the insiders in Canada. But what we're really wanting to see is, are they going to buy on a dip? And they have been. So it's really important to see the indicator moving up, and it's been a great encouragement for those of us who've been kind of hit by the volatility, and who hasn't been, to see that the insiders are actually taking advantage of this volatility and buying. And where are they buying? Well, they're buying. This is the energy indicator, and even though the energy is only off a little bit from its highs, we see this bottom line is the indicator. It's moved up, and it's 100%, so which is pretty good considering the good run that energy has had. And it's really, I think, important to follow the energy insiders in Canada, because I'm doing this now at INK for since 2007. We got going 2006. We kind of got into it right around this big move into the housing bubble. And there was a big move also in oil and gas at the time, 2007. And boy, did the insiders sell into that. When oil was spiking up, I believe it got over $100 a barrel. Our charts, they lit up like a Christmas tree, and we saw there was tons of insider selling. So there's a lot of doom and gloom still in the amongst oil traders. I I don't see a shortage of bearish arguments out there. I've seen some usual suspects who are talking about $40 oil and if the Strait of Hormuz opens, we're gonna have a flood of oil into the market. Well, insiders in the energy sector are buying on the weakness here, so they're not quite going with that narrative. They believe they're signaling they have good, strong businesses and they have confidence in the future in the Canadian oil patch. So that's really important. But where we're really seeing the buying is in the mining, and especially in the precious metals area. This is our gold indicator, the blue line. It's really ramping up here. It's over 300%, 361%. So it's like more than 3.5 stocks of key insider buying for everyone was selling. So this narrative that the Fed's going to raise rates, I'm going to get into that in a little bit. Gold is like trading down for the year, and I've heard it all. And well, we've seen some good insider buying here. So they're, maybe early. We don't know how far gold's going to go. Is it going to reverse next week? Is it going to reverse next month? Hard to say. But insiders are looking at stocks and picking up a number of stocks that have fallen off their highs. And we also see it in the silver. This is a big jump in that 3-to-1 advantage for the buyers. So this has been a good week in terms of insider sentiment, even though it's been a tough week for a lot of investors. Now, I want to just quickly go through some of the themes that we're looking at. Basically, our core theme is a theme of rebuilding, rearming, and de-dollarizing. And I think that fits with what we're seeing here amongst the insiders. I'm just going to pull up a couple of items that I've seen over the past week. This is a chart of the SPR, the Strategic Petroleum Reserve in the U.S. This was published by Black Lion CTA, who I follow on X. Pretty good follow. He's cross-asset. Puts out some good charts on the weekend. And what we see here, this is a white chart. And basically, what we've got is the SPR, of course, falling into this is the Russia-Ukraine war. And President Biden used that opportunity to drain the SPR. It started to rebuild a little bit, but here we go, elevator down again with the Middle East. Now, that was on Saturday. The line is probably below that level now, so we've taken out the Biden lows. And this is, I think, important because talk about rebuilding. Countries that were caught without enough reserves are going to have to rebuild them if the Strait of Hormuz, once the Strait of Hormuz gets back to normal. Now, there's a couple of ships a day going through. If this negotiation happens, best case scenario, another month, we get the Strait back to normal, we're back to 130 ships a day. Countries are going to have to rebuild their stockpiles. Like they're not going to want to be caught short again. And this so-called agreement, MOU, this is just to start negotiations. This is going to take a long time, if ever, to get a final agreement. If there is a final agreement, and even if there isn't, the Middle East is not going to look the same going forward as it did on February 27th. There's going to be risk associated with this process. And so I just don't believe policymakers are going to just be content to kind of live just in time with their oil inventories. We'll see. There's plenty of voices out there who think, no, the oil glut will be coming back, and we were pushing against the oil glut last year. Well, many analysts were pushing for the concept that there was a big overhang in oil storage. But our view was, well, China was a big part of that, and they were buying it as a strategic asset and as a strategic reserve. And just like they were buying gold as a financial asset, they looked at oil differently compared to some other countries. And I think countries are going to be looking at the China experience and go, well, China rode that out, and we don't want to be caught if this happens again in a position where China has all the reserves, oil reserves, and we're short. So I'm not. We'll have to see how it plays out, but the idea that we're going to be seeing a flood of oil hit the market, I think that's probably a little too pessimistic. So that's all I'm going to say about the oil. In the mining side, there's been a lot of volatility recently. And I think, first of all, we have to split up between the industrials and the precious metals. Industrials, I think there's a strong case for the tailwinds in mining. For example, this is a story from Bloomberg about China considering a $300 billion fund to rebuild its data infrastructure to accommodate AI. So this is going to be a national security concern for them and a strategic initiative. U.S. has got to play along with it. They've got to compete, and we're seeing all these IPOs right now. So this is going to be a continued support mechanism or support factor for the industrial metals. We're also seeing rearming. There's a story this week about France. They've increased their nuclear arsenal by 20% already. I mean, the nuclear arms control treaty is gone. So it's kind of a free-for-all. So for the uranium bulls out there, and probably good news for those worried about nuclear war, it's bad news. So we're seeing countries ramping up their nuclear arsenal, and in the U.S., they've got to rebuild their complete strategic arsenal inventories. But just yesterday, I believe they fired 49 Tomahawk missiles into Iran. Those types of inventories are becoming quite low, and according to media reports, a report from a think tank, it's going to take years for them to rebuild their munitions. So that should support a lot of industrial metals, titanium, copper, and rare earths. So that should be a nice tailwind for the industrial miners. Now, a more complicated or a more, difficult area this last few weeks has been in the precious metals. And this is kind of like 2003, the summer 2003. It's a deja vu where Jerome Powell hiked in the summer of July, and then we had to deal with this. The dollar is the cleanest dirty shirt, and gold was facing these headwinds of this narrative, the Wall Street narrative that it doesn't pay dividend. Dollar is strongest of a weak lot, but we pushed against that because we said we believe that the underlying fundamentals of reserve diversification were going to win out. And sure enough, ECB came out with a study this month about how that has played out. And it's a bar chart. Just on the left, we've got a breakdown of dollar reserves and other reserves by central banks. And back in 2023, it was about 50% of central bank reserves were held in U.S. dollar denominated assets. That has fallen to 42% as of last year, and gold's been the big winner, moving from 16 to 27%. And that trend is going to continue, I think, because you're going to have continued reserve diversification. We saw the Treasury freeze some crypto, some stable coins, I believe, of Iran just during the last few months. It's going to encourage more and more developing nations to de-risk some of their reserves. And it's not a question of the dollar losing its dominance; it's just dollar diversification. And we see it also with payments, because a lot of these sort of developing nations, if they want to diversify their payments outside the dollar, they're going to need to back their currencies with something tangible, and that'll be gold. So where does that leave the American central bank, the U.S. central bank, though? Because we have some an inflation problem in the U.S. and for example, the PCE, which is the Fed's preferred measure of inflation, it has not been back to target since February, I believe, 2021. Kevin Warsh, the Fed chair, he's said famously now that inflation is a choice. And looking at that chart, I think you can say, well, it has been a choice. The Fed has accepted above target inflation, and there's a good reason why, I think. And this is a chart from the Peterson Foundation, And this is a chart of the net interest expense on federal debt as a percent of GDP. And now it is sort of breaking out to new levels. And I look at this as a tax, so it's above 3%. The more they raise interest rates, the higher this projection is going to go. And this is going to become an unstable situation. So the Fed is really constrained about how much it can raise rates. So all this chatter about rates are going up. Well, there's a problem. And that's why I think we're in a period of fiscal dominance, that the Fed is constrained by the realities. And if they raise rates too much, they're going to set off this potential risky situation, unstable situation. So, I think raising rates at the Fed is its last resort. But what can they do to calm the market down in terms of how they're fighting inflation? Well, I think Kevin Warsh has talked about reducing the Fed balance sheet. Now, this is again from the Peterson Foundation. This basically shows on the far left here that the Federal Reserve owns about, this was as of March last year, about 25% of federal debt. Now, Mr. Warsh has talked about reducing the Fed balance sheet. And so what would happen in that situation over time, a lot of these holdings of these Fed treasury holdings would move over to the private sector, mutual funds, banks, other, over time. But I kind of see this as kind of a smoke and mirrors thing, in that you're moving from the public sector, the Fed, over to the private sector. That's not gold negative, right? You're probably going to hear that as soon as he starts talking about it. Somebody in Wall Street is going to say, well, that's gold negative. It's going to reduce the money supply. Well, we'll see. Back in the 70s, and gold had its fabulous run, the Fed wasn't responsible for holding a quarter of the federal debt. It was much smaller than that. It was really not a non-factor. It was the commercial banks that generated the money supply, and we could go back to that phenomenon again. So I don't really worry about this. The Fed's going to reduce its balance sheet. Somebody's going to have to hold the federal debt, and it'll probably be the private sector. Well, it will be the private sector. More importantly, it's a balancing act that the Fed's going to have to do, because on this chart, we take a look at how important the federal deficit is to keep the U.S. economy going. On blue, we have the change last year in nominal GDP, and that's in millions, is just over $1.4 trillion. Yet the deficit was close to 1.7 trillion. So without a major fiscal stimulus, U.S. growth is going to be very constrained. So I don't think we're going to see austerity. I don't think we're going to see the U.S. government cutting back on the money supply. That's for another day, and we're not there yet. Once we see Washington policymakers get serious about bringing back in the federal debt to 3% of GDP or something, then I think maybe we have to relook at our gold assumptions. But right now, there's still I think a big runway here for gold, while the U.S. maintains this model of basically using large deficits to keep the economy going. So that's just the background that I wanted to get into in terms of our theme: the rebuilding, rearming, and de-dollarizing. I think now just take a look at just how quickly insiders have responded to this pullback, particularly in the mining area. And to do that, I'm going to go to the screening page at INK. So I will share that, and you can just see how much the mining sector has caught the attention of others. This is our screening page. I've just looked at it. Everything public market, that's code 10, going back to last Friday up until most recently. And this provides a list of issuers with buying. And one of the ones we've seen is this Lennar Royalties, which was spun out from NGX Minerals last year. And what we saw here was a ride down from its high, along with many other precious metals related stocks. And then we saw Adam Lundin, CEO, he bought quite a bit. He bought $2 million worth of his stock last Friday. And that caught our attention. We wrote about this in the morning report on Tuesday. And what's interesting about this Lennar Royalties is that they've just secured a silver royalty from Lundin Gold. And so really makes Lennar Royalties a play on the silver price. And you can check out our report this week, our Tuesday report, on how that's structured. One of the other names that we found here, just looking down, is Barrick Mining. So Barrick, CEO's, he's bought and sold, but he was net buyer before the sell-off, the kind of June sell-off. And we saw a director spend just over $500,000 buying shares. So that's nice to see. It's helped give Barrick a mostly sunny INK Edge outlook. So what that means, mostly sunny stock is in the top 30% of our rankings based off of valuations, insider commitment, and price momentum, price direction. So what I use the INK Edge for is a check on my conviction, and I use it as a filter. You can use it any different ways, but at the very least, it's a good check as to say, okay, if you have a position, a view on a stock, then that's one way of using the INK Edge to see, does it align with your conviction. Now I have to say that nothing in this presentation is investment advice or a recommendation to buy or sell securities. Please consult a licensed financial advisor before you make any investment decision. Another name that's seen some buying in the gold area is Hemlo Mining. It's revitalized the Hemlo mine in Ontario. Inside have been quite active in this name, and the most recent trade was last week, I believe. Oh, it looks like there was one also on early this week. So they've been continued to be active. It also has a mostly sunny outlook. Also seeing some buying at this junior miner Honey Badger, for example. They've just acquired a new flagship property in the Northwest Territories, a silver mine, and they believe it has, I believe, some rare earth type potential, or germanium. So it's interesting seeing Chad Williams has been buying, and there are a number of junior stocks that have seen some buying. Someone in my household does hold this stock. He's got a sunny INK Edge outlook, so it's in the top 10%. And it's not it's not a fundamental take on the property. It's just a strict, INK Edge is a strict quantitative take on how we can value a stock like this. And usually it's just in terms of its price to cash when it's a junior mining company, and what are insiders doing, and how's the price momentum. So that's what we're looking at. And of course, we've also seen some energy, but I do have to point out, I do want to reiterate that most of the buying has been in mining. Gold mining, non-gold precious metals. Tourmaline Oil's been buying, Micro's been buying more silver mining, Discovery Silver, Artemis Gold mining. So most of the buying has been mining, but we have seen some energy as well. This isn't surprising to see energy not seeing as quite as active amongst the insiders, because again, the stocks have not come off as far. But Whitecap Resources, which is a stock that I hold, we've seen some buying here, as most recently by the CEO. And Whitecap, it's not that far off of its 52-week high here. It was 52-week high 1734. It was up today a bit, despite the volatility in the oil price. So that gives you a flavor of what we're seeing in terms of insider activity. I would encourage everyone to keep on top of the insider filings as they come through. If you're on INK Research, you can look at the screening. If you're on Canadian Insider, we can show you. Here we are, insider filing. There we go. Just want to show you Canadian Insider. This is the home page. You can get it. You can take a look at the top filers here, and this is by volume, but it's a good starting point to see where most of the buying is. There we see some on our royalties, and if you sign up as an intro member, you can click through to that. If you're a Canadian Insider Club member, you can get access to the junior stocks as well. And if you do sign up, again, you can sign up for INK Chat, and there's our INK Chat screen, and we're going to have some more news about coming up in the summer. Hopefully we'll have launch our merch store. We'll hope you'll check that out. And if you go to INK Chat, you can reach out with questions anytime. Reach out and ask a question. We have Ask a Question channel. You can direct message me. And if you have a question about how to use the site, maybe you have a question about a stock or an idea, put it in the chat so it can be a general question for others to benefit from as well. And with that, I will thank you for stopping by, and I hope to see you in INK Chat, and we'll see you again soon.